Welcome. You're listening to the Best of Investing on News Talk 910. Our show is about presenting valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, Robert Schiff of RPM Mortgage, and Lou Batmale of LPL Financial. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the 3 trivia questions for vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is famous taglines from the movies. You'll understand when we get into that.
No Olympics-themed questions, huh?
No, you know what? Maybe next week we'll have that. Okay.
All right.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. And you can record our show on our website, dar.fm. Check them out. Reminder again, World Wraps in Corte Madera and Santa Clara, still giving our listeners a free smoothie if you mention the Best of Investing and purchase a wrapper or bowl. Go there for lunch today, best smoothies in town. And Mark, tell us about real estate. You had a very interesting situation go on.
Oh, well, we've got, I brought in an article that actually kind of got my blood boiling a little bit. We're regular listeners to the show will know that we've been talking about for the last several weeks how, the volume of real estate available to buy has actually shrunk. We're down on the inventory, and that's, caused a little, mini bubble in prices, and a lot of multiple offers on the existing real estate. And of course, we're really talking about here in the Bay Area because, this is a Bay Area show. But article came out in Bloomberg this week that talked about how second lien holders are putting a big drag on short sales. And of course, short sales are one of the more popular ways to acquire property today. Banks aren't foreclosing on a lot of properties. In fact, it's actually cheaper for them to agree to a short sale than it is for them to foreclose, go through all those foreclosure costs,
Sure.
Get the person out, and then resell. So
that doesn't mean that's what they do. They tend not to act in a sane manner these days.
yeah, well, I know. Dude. That's the logical
That's
way.
logical,
But,
yeah.
But anyway, this article talked about not so much. Well, for example, oftentimes people have a first and a second on their home, and oftentimes that second is effectively worthless because the property values in extended parts of the Bay Area have dropped as much as 50%. If these homes were bought in 2005 or 6 using a first and a second, oftentimes the first itself is already more than
It's underwater
yeah,
already.
it's completely underwater. But what's happening is that a lot of these banks are selling off these worthless seconds, and there are companies out there that are buying them for pennies on the dollar, and then all of a sudden they're holding up short sales. So there was this profile in a company that calls themselves Franklin Credit Management, and the chairman of that, or the president, was quoted as saying, at the end of the day, my friend, you signed a contract, you owe the money. Now we're willing to reach an accommodation that is commensurate with your ability to pay. I'm reading that quote, and it's like, wait a minute, you bought a worthless piece of paper for pennies on the dollar, you're gambling basically, and now you're going to act like you're taking umbrage over the fact that these guys signed a contract for that now worthless second, and you're going to hold up a short sale opportunity because you want to get paid something.
That's what it sounds to me.
Yeah.
Because they're not really waiting for the market to turn around. What they're doing is they're preventing sales.
What was
from
their
happening.
name? Hostage Financial?
Yeah.
Hostage Financial. So anyway, it's just one more little item that is just making this real estate market, if nothing else, very, very interesting. So I don't know what the answer is, but stay tuned.
Well, I agree with you 100%. I just got on the phone today with several clients that are in the middle of real estate transactions, and it's hot out there, all over the place. It's really shocking how people are talking. I had one talking about a short sale. He goes, "Well, maybe I shouldn't do it now." I wonder what your opinion was on that, because he goes, "I'm in the process. I guess the first step in this process of short selling, I've heard, is you stop paying your mortgage, because unless you do something else, they won't talk to you about it."
Talk to you.
Yeah, so he stops paying his mortgage. He's like, "But my house might be up to my purchase value from 2 years ago in about a year. What should I do?" And I'm like,
No, it's not.
I don't know.
Yeah.
I don't know what to tell you. He's in a real good neighborhood. I'm like, it could go up $100,000. I don't advise people on short sales. That's not what I do. But,
But if you're stuck, if you're upside down and your mortgage payments are 200% of what you could rent the house for, and probably the way the market is, you're not going to regain your equity for at the best several years, and it's pretty dim to have to pay 200% of the rental value for 2 years to keep your credit good, which is really a burden a lot of people can't afford to take. So short sales are something that's a way out. It's a sale. It's to get out from under.
It'd be great for those people to just walk over to the bank, hand them the keys, and say, "Here, I've just become between an owner. I'm now turning into a renter."
Yeah.
Just-
Well, the
just get out
government
of-
has programs that there's banks supposed to take the government helps the bank take the property back and let the owners become renters in the same property, and within a few years, when the equity goes up and when your credit is reestablished, they'll work out a program where they can sell it back to you.
How long does that take, though, to get that process done?
I've never heard of anybody successfully being in the program. Maybe that's because
Yeah.
we live in the Bay Area, but it's one of those programs.
Sounds
that
good
I
on the
don't- yeah,
outset,
yes,
you know.
Yeah.
Yeah.
Sounds
So
political.
Maybe it is.
You know, it really does. Yeah, we got this great program. We're going to help you save all this stuff, but then, but nobody qualifies.
Yes.
Yeah, I've had that
Yeah.
before.
Oh, I'm sorry, your front door is green. You're excluded.
Right.
Yeah.
It's like the cash for clunkers thing. When everyone qualifies, boy, it could be a big problem on the balance sheets. That's
Yeah.
cash for guys bringing their 81 vans in, like, oh hey, it doesn't run, but I get $4,000, right? It's like
Yeah, someone's got to pay for that.
exactly.
Yeah.
Yeah, the market is really hot. I read a national organization of realtors, an NAR, just before coming in and doing the show today, and it said that it had the fewest days on market for major metro areas in the U.S. And Oakland was actually number one with the fewest days on market, 24 days on market average for properties that went for sale. And I happen to know that we make private money loans in Oakland, more loans in Oakland than any other city in the Bay Area. So there's just a tremendous amount of fix and flip activity.
Well, that's the question. Is what kind of activity is it? Is it mostly fix and flip? I mean, in yours it is, but in general,
It's still
prices
about half
down?
of the volume is investor volume.
If it's 24 days, they can't be applying for a loan because you're lucky to have an underwriter look at the loan.
They're paying all
24
cash.
days.
Right, you're
Right.
talking, well, that's true. It's mostly cash or quick qualification or private money transactions. So it's pretty interesting.
Well, one thing from the financial side, I know I throw a perspective out there loosely, but what we're really wondering is the shadow inventory out there of stuff we talked about. What's in the middle of a short sale process, loan mod, and all these different things. And they don't report this on balance sheets. This is the stuff that, like 2008, is frustrating everyone at this point. Like, what's really out there we don't know about? I think Oakland's a great example because I'm sure there's a lot of real estate transactions. It's a big area, and what's out there that we don't know about in Oakland. We're seeing the headlines right now of real good news everywhere, but again, underneath every layer of good news, there's something there that we don't know. That from the financial standpoint, that's what we're trying to research. Case Shiller, they came out. They're pretty aggressive about the shadow inventory could be higher than people think.
Yeah.
So it should be interesting. I think the next couple months we'll tell the tale for sure.
All right, guys, we're going to go to a quick break. When we come back, we're going to get into email time, and then Lou, you've got some kind of interesting financial stuff on the economy that you want to share with all of us here. Okay, so remember the theme is famous taglines from the movies. And here's our first commercial break, our first trivia question. A tagline from this 1984 movie gave the instructions, don't get him wet, keep him out of the bright light, and never feed him after midnight. What was the name of that movie? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. A tagline from this 1984 movie gave the instructions, don't get him wet, keep him out of the bright lights, and never feed him after midnight. I see some blank stares there. What was the name of the movie? 888-912-1190. Make sure to include your name, email address, and speak slowly, and please spell out your email for us, one letter at a time. And I'll give you a hint, this movie was originally supposed to be like for kids, but it got a little scary there. All right, we will be right back.
I know the answer.
You know the answer
You
to
wrote
that one.
it down,
I think I know it. Yeah, that was a Spielberg movie, wasn't it?
I think so. I think it was.
I'm pretty sure I know.
First I was thinking
Lucky
Goonies.
Horror.
It's not Goonies.
No,
it's
not
the other
Goonies.
one.
It's not Goonies.
Yeah, it's not
Goonies.
Goonies. Starts with a G though.
It starts with a G. He's got it. Keeping his suspenders, huh?
How's Facebook doing today? Is it
Yeah,
down another
what do they call it?
Talk about it.
Farce book or fate?
Flop
Yeah,
book?
Flop book or something?
Well, the big news is his sister got a job at Google, I guess. Zuckerberg's sister. And then he has his roommate.
Are you serious? Oh,
Yeah,
that's
his
funny.
roommate from college, from Harvard, is a runner for. The logical thing would be Nigeria, but it's an African country.
Yeah.
He was Facebook member 14, so he's been interviewed a lot lately. I mean, well, LinkedIn came. The shocking thing is LinkedIn came out with some really good numbers. LinkedIn's
That
back
was
up.
shocking.
Yeah,
I would've,
they're selling
you
the premium service. I think it's searching for employment. That's where it comes from.
I liked LinkedIn, but I wouldn't have bet a year ago that LinkedIn would have done better than Facebook.
Not in the popularity camp. But again, I talking to people in the search industry,
Yeah.
they want to get as much intel as they can on people, their networks, and all that stuff. And they apparently that paid for search aspect, like you can dig really deep and find more
Wow.
information. is
Dow's
paying
up
off.
200, 217.
Oh, it was
There's a little rally going on this afternoon.
Okay,
It hurt.
maybe when we get into your stuff, say, hey, well, why did the market go up a couple hundred points?
Okay.
Get a little bit of
I'll try and figure something out.
all knowing and seeing.
Oh,
Why did the market go down? Why did it go up?
Facebook had a reverse split.
Yeah.
Yes.
Yeah, right.
Okay, so do you want to go right into email time, and then we'll get into?
Yeah, sure.
Okay, so what we'll do, the email time, we'll probably take this next segment because few
You want to
minutes
give
each.
Robert his first?
Okay.
To hog all the radio.
Yeah.
The market's closed now. I guess it's.
Yeah, it's
Yeah.
closed now, so we can say that it actually.
Closed up. Yeah.
Yeah, closed up.
It moved almost 200 points every single day this week. I really watched it.
Oh,
Yeah, up and down, up and down. It was volatile, to say the least.
yeah, definitely.
All those individual traders, right?
Would you hear about that? There's a guy who crashed this week, night trading. That's you
I
said
heard, so I didn't read the whole
Yeah,
thing.
it was really
KN90?
K and I. It was a Tuesday. I think it was Tuesday morning. They a bunch of trades came across the system, and some person, not a computer, some person said cut them, and they cut everything off at these desks. And they said that this part of this exchange started erupting. Actually, CNBC was there to report it. They go, something's going on, and there was false trades coming through in the computer system due to night trading. And so the example is if you said, hey, buy Microsoft at $40, I say buy it at 41. I say 100 shares, you say 1,000 shares. They had trades going off at 100,000 shares, 150,000 shares at the same prices, all like within 2 minutes. And they said, but the big thing was a person caught it, not a computer, and shut the whole thing down. So it could have been the next flash crash. It was that close. They said it was at the open. Flash crash last time happened. So the high frequency trading programs, the guys have computers like that set up. They're just night's back ending the whole thing. It's just it's a nightmare. It builds so much distrust in the system.
Yeah,
It makes my job that much harder.
A
Between that and Corazon.
night system.
Between that and Corazon.
A nightmare.
Yeah, really.
They're actually for sale, I think, in the private equity market right now. One day and you're sold.
And then Franklin Financial pick them up.
They've got the money.
Yeah, really.
That sounds like Tony Soprano. No, I'm the owner of the house. Who are you?
Yeah. Exactly. You guys ready?
I got the second.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, Robert Jitt, and Lou Batmale. And when we cut to the first commercial break, we asked this first trivia question. And again, the theme is famous taglines from the movies. A tagline from this 1984 film gave us the instructions. Don't get him wet, keep him out of the bright lights, and never feed him after midnight. Mark, what is the name of that movie?
Gremlins.
Gremlins, that is correct. Okay, we're going to get right into email time here. Actually, just before, we'll get right into email time. Okay, Robert, this is an email we received for you. Which type of loan is best for me, a fixed loan or an adjustable one? You can imagine that you would just answer blankly without knowing the person's situation, but go ahead.
The answer is yes, perhaps.
Yeah.
Always
Okay,
yes,
next.
perhaps. Yeah, most of the questions I get asked, the answer is going to be I have to know more about the story, the person who's asking the question,
Sure.
what your aims are, what your perspective is, what your financial picture is, and
What do you
Also,
personally think interest rates are going to do? Too,
yeah, and
right?
then what they are now, and what we think they're going to do. And right now, the fixed rates are so low historically, and the spread between a fixed rate and an adjustable is about the lowest it's been. There's not a lot of reason to get an adjustable. About the only reason some people want to get an adjustable is that for the 5 or 7 or 10 years that the note is fixed before it becomes adjustable, some of the programs have a payment that can be interest only. So,
And what kind of rate are you? Give us an example of an adjustable and a fixed so we can see the difference.
well, say on a 30-year fixed loan that's about $500,000, the rate might be, and I hate to quote rates because it kind of goes in the air, it's different usually, but say it's something like 4% for a 30-year fixed, and on a loan that's for 5 years or 7 years, that might be 3.25%. So that in terms of, that's a big spread these days.
Yeah, that's
huge.
really big.
Yeah, and especially if it's 3.5%, you can pay interest only. And some of the loans that are larger, that are $800,000 or $1 million, when you're looking at interest only, it's a significant difference. If someone's only had their business for 2 years, or they're looking at they're just in a little tight situation, and they'd rather have their cash flow and less right now, or kids are about to go off to college, or whatever reason is, that might be an advantage for them.
Do you remember the old days when an adjustable rate started at 9%? It was like, man, that's a great rate.
Yeah.
Well, it's really tempting when you can, significantly cut your monthly payment to think, well, I'm going to be making more money in a couple of years, or 5 years down the road, I should be making a lot more money. But that's a dangerous road.
Yeah.
I think, and a dangerous assumption to make, particularly now. I mean, if you can lock in something at 4 or 5% versus, okay, maybe you can get something under 2 on a variable, but we're never going to see these rates, probably not in our lifetime again. If you can lock in a fixed rate, yeah, it's a little bit more money, but you're going to pay that. You're actually going to pay down your house. You're going to make that fully amortized payment. And,
It's usually much better, but there are some people who say, well, I know that we're going to have another kid, and we're going to get out in a few years, and so we'll only be here for 5 or 7 years, or
Well, it's a
whatever.
typical 5
I'm going to
7
sell
years.
my business, and then it could make sense. But it's a gamble, because I think at some point we'll be out of a recession, and whatever we do, I don't think we'll see these interest rates again or anything like it for a long time.
Well, one of the things I appreciate about you, Robert, is the fact that I've heard, you've been really honest with people when you've done loans with them. And if it's not in their best interest, you just tell them. And you give them free advice and just say, hey, you don't need to use me for whatever. But there are people out there who really do need your services. So how do they get a hold of you?
My name is Robert Schiff, and my company is RPM Mortgage. You can check out our website, RPM Mortgage, or best is to call my cell phone, which is always attached to my body, at 415-515-1941. And just this past week or two, I've heard a lot of stories about purchases or refinances that have gone along and at some point fallen apart because of a bunch of different reasons, but primarily that the people who were borrowing really didn't have a comfortable or personal connection with the person they were dealing with, so that they went online, found a company on the internet, and everything was fine. But as they got to the end, we just decided that you have to pay off your $30,000 car loan, although we proved you without that condition.
Yeah, that's why it's really important to get somebody who you can talk to locally.
local's always best.
Local's best. Okay. Mark, we got an email from you that says, how do you protect yourself against fraudulent borrowers? That's a really good question.
It is, and I get that a lot from my investors. And for new listeners, my name is Mark Hanf, and my company is Pacific Private Money Loans. We're located in Marin County, and we're a private money lender, also known as a hard money lender. We do the loans that the banks don't, which nowadays is an awful lot of loans. If it's not a consumer home loan, the bank generally today isn't very interested in hearing the application. But we mostly do loans to real estate investors, and so real estate investors who are buying, fixing, and flipping real estate, or who are collecting rental property. And so my lender clients, the people who invest in those notes to earn anywhere from 8 to 10% interest on their money, new investors, when I meet with them, they oftentimes ask that question, what are you doing to protect against fraud? And what we do, basically the thing, and most hard money lenders do what the same thing we do, which is, obviously we're going to pull credit. We are going to, usually ask for, copies of bank statements. We're going to look, obviously do a Google search. Sometimes tax returns. Usually that doesn't, that doesn't always fall into it. But there's a new service that we have that not a lot of lenders have signed up for because it's not cheap, and that is a background search. And this is the same type of search that private investigators oftentimes have access to. Sometimes they call it skip tracing because it's a way to hunt somebody down if they're on the lam. But we use it basically to input the same information we would to obtain a credit report. We put in the social security number and the name and see what pops up. And oftentimes some very interesting things pop up that you wouldn't find on a credit report, such as criminal history. Doesn't oftentimes show up on a credit report. Sometimes certain liens and judgments show up that also get missed on a credit report. So there's just some very interesting stuff. So we do that, and lastly, part of it is just having an awareness of what's happening in the marketplace. First of all, we only take local loan requests. I don't make loans in Atlanta, Georgia, or Texas, or Phoenix. We make loans in the Bay Area, in Northern California. An interesting thing happened this week. We got a call that I think was a scam, was fraud. And the guy calls and says, I'm buying a property for $230,000 in Sacramento, and I need a loan for $130,000. And I said, oh, well, that sounds very doable. The numbers make sense. You're going to come in with $100,000. Well, no, the seller's going to carry back $100,000, so it is 100% financing, but your loan will be well protected because there'll be a second behind you, and obviously he'll have an interest in making sure your loan gets paid. And so anyway, he gives me the address, and I go look at the property, and as it turns out, I had made 2 loans on that same street in Sacramento, and there hasn't been a trade on that street in 5 years for more than $125,000. And I did a loan on a house 2 doors down that appraised for under $100,000.
Yeah,
so this guy was completely scamming me.
Yeah.
So not only was he looking for 100% financing, but he probably worked some scam with the seller where they were actually going to get a loan from me, divvy up some monies, and then leave me hanging, or leave my lender hanging with the property that wasn't even worth the $130,000 loan.
That's what we used to call a cash out purchase.
Yeah, right. So really, it's an awareness of the market. It's we only lend locally. We're not a nationwide lender. There are a lot of hard money lenders in California that claim to be nationwide. We can lend anywhere. I just think that's nonsense. I think you need to be local.
Do you guys pull title on everything?
Oh, absolutely. Oh, yeah.
And get title insurance.
Yeah.
Right. You go through title insurance, the whole process.
But the title insurance company, in a situation like I just described, they're not there to determine whether or not the property has that value, because they're not insuring value, they're just insuring title. So I would have a $130,000 loan on a piece of property that might only be worth $75,000 at the end of the day.
Well, also we
do you do loans without getting an appraisal, or is that usually?
Well, we have on purchases, because again, we know the Bay Area really well, so I can go on the MLS and I can determine that purchase contract is fair market. And and we look for things. If the buyer's coming in with 35% cash down or more, that's a equity protection. That's the protective equity we're seeking. But if it's a seller carryback, that right away is a red flag. Then you have to wonder, okay, is this truly? The last but not least, that it wasn't an MLS transaction. That Sacramento was a FSBO, for sale by owner. So like all of it. I mean, the guy must have thought I was an idiot.
Maybe they work with Franklin.
Nobody called a lot of people already before he got to you.
Oh, and he took umbrage when I told him he was a scammer. Yeah. So.
Or you say, oh, you're not the scammer, but the seller's trying to scam you.
Yeah.
You poor devil. Here, I'm trying to help you out. Tell you what, we're going to go to a quick commercial break. When we come back, Lou's got we got an email for Lou, but then he's also got some very interesting tidbits on the economy here.
Stay tuned.
Okay, before we cut to the second commercial break, we have another special trivia contest here. And the winner is going to receive an overnight stay at the Westin Barossa, which is located in the legendary Napa Valley, situated in downtown just across from the world-famous Napa Valley wine train. Take in nearby attractions like the Napa Valley Opera House and the Oxbow Public Market. The Westin Barossa, Napa, offers 160 king suites that allow you to relax or to be productive, whatever you're in the mood for. In the evening, unwind with the award-winning cuisine of Chef Ken Frank's French restaurant, Le Toque, recipient of a Michelin star. www.westonnapa.com, and you can call them also at 707-257-1800. Check out that place. It's very pretty. And the trivia question is, over 1,350 people get injured each year doing this. Now, here are the rules. No previous winners on our show, and you have to email Edward at bestofinvesting.com tonight by midnight. And the winner will be randomly chosen from amongst the correct answers we receive and announced next week. Now, here's the second commercial trivia question break, where the winner is going to receive a 3-day, 2-night stay at the Lighthouse Resort. And again, the theme is taglines from the movies. He's having the worst day of his life, over and over and over again. What was this 1993 movie? Actually, I hated this movie, but the first three callers with the correct answer. Did you?
Awesome.
The first three
Gets
callers.
better every time.
The first three callers with the correct. Actually, I didn't
No.
hate it. I just, when it happened 15 times, I counted them. That's when I didn't like it. Okay, the first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. He's having the worst day of his life, over and over and over again. What was the name of this 1993 movie? Call 888-912-1190. Make sure to include your name, email address, and remember, please, to speak slowly and spell out your email for us one letter at a time, and we will be right back.
That movie's classic.
I know, it's classic.
I like the
I
part where
don't
he gets
like
slapped
Bill
like
Murray,
5
though.
days in a row. Slap, then
Yeah.
slap.
That
slap,
part was
then
fine.
slap.
There were definitely parts that were funny.
Groundhog Day, yeah.
Yeah, I just don't like Bill Murray.
So that hotel that advertises that you can relax or be productive,
Yeah.
perhaps they should be relaxed, productive, or reproductive.
Wow.
This is a
That's
family
even-
show.
That's even
Jeez.
Is this cable radio?
Yeah, cable radio.
Is this Howard Stern?
Yeah.
We're on Cirrus. So, describe your first sexual experience. How old were you?
You know, how did I know she was 13? She looked 15.
Oh gosh.
Funny. Robert. He's coming with it. He was coming with just a little bit of the offshoot, you
A little
know?
edgy.
Edgy, that's a good word, edgy. Okay, so in this segment here, we'll get into your email, and then you had your list of stuff that
Yeah, the stuff I did, compliance
Very
approved material we went over.
Compliance.
Compliance.
All right.
I think they're going to want a copy of the show too. I heard that the other day. They want tape of all the shows I've done.
Who does
just go on the internet and
Yeah.
they can look at it there. Yeah.
My compliance team.
YouTube?
YouTube. Yeah, exactly.
Yeah.
Don't type in Lube Up on YouTube. You're going to like what you see.
Do you have something on the internet that we don't know about? Oh, okay.
I do not.
Not yet.
I was in my daughter's friend had a rock video. I was in it, but my name doesn't pop up. Thank
Okay.
goodness, so.
Just the face.
Yep.
Okay. Okay. You guys ready? It'll be. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-hosts Mark Hahn, Robert Schiff, and Lou Batmale. We have to look at you each time in order to know who's who. Can't tell the players without a scorecard. When we get to the second commercial break, we asked this trivia question, and again, the theme is famous taglines from the movies. He's having the worst day of his life, over and over and over again. Everyone, what's the answer to that? What's the answer?
Groundhog.
Groundhog Day. That is correct. Okay, Lou, we got an email for you, and it's how do I figure out how to diversify my portfolio? Why don't you tell the audience what you do for a living?
Okay, my name's Lou Batmale. I'm with LPL Financial, based here in the Bay Area, and I handle investments in retirement, income producing investments for clients all over the Bay Area. And that's a great question because after a week like this week, I guess the best diversification is probably to buy a parachute and a rocket launcher at the same time because we've seen
Up
seen
200, down 200.
Yeah,
up
it's-
200.
you know, after Friday's activity, after a pretty good jobs report, we saw some good movement in the right direction. But I'll tell you, it was a rough week with moves based predominantly on what people are saying right now, not really what's going on. But this is a critical question that keeps on coming up for many people because people are kind of stuck in a position right now. When you speak about diversification, the idea is that if you have 8 panes to a window, and when those panes get knocked out, you just have to replace the one pane instead of all 8 of them. And what people have done is done what made them comfortable over the last couple of years, especially after 2008, a very tough market place, which we've kind of recovered from at this point to a certain extent. I mean, we're really back up through the numbers we saw in 2007.
Yeah, I mean, we're at 13,100.
Right, exactly. So we're either at an inflection point where it goes up from here or goes down from here. We can touch on that later on, but the bigger question is, now that we're here, what do I do? And the price of bonds really has gone up. And one recommendation I've done for my clients in their accounts, and one thing I'm saying to my people I work with and do an analysis for, if you have some gains in your bonds, now's the time to maybe trim some of the bond holdings and go with what's not popular. Well, what's not popular right now? That's mostly international investing, maybe even international bonds. I'm not saying go out and buy a bunch of bonds based in the country that's having problems right now, but they're euro-based currencies or non-euro-based currencies that are quite strong. And I think that people are really, kind of hogtied in this. Well, I'm here, I'm not going to change. And the idea behind diversification is you should always be changing.
Yeah, you
Not
can't just
frequently,
You can't just stick your head in the
No,
sand.
exactly.
Otherwise,
No,
it's all on a bucket whip company.
The economic world's always changing.
Yeah, no. I was with this client who invested predominantly in Canada and Europe back in 2005, and she had a rip curl of a great, market run. I'm like, why are you still there? She goes, I didn't know I was still there. I'm like, well, that's why you need to set an appointment, follow up, and check in on it. But with that, I kind of want to dive into some the news, and that is that we just got through kind of earnings season. We're just about there. What we don't know is what the future holds right now from earnings perspective. I mean, you got to remember these companies' job really is to under promise, over deliver. Yeah. That's kind of what they're doing with earnings. What we're seeing is revenues relatively stable, but earnings have kind of come down a little bit. We had a good jobs report on Friday where manufacturing jobs really increased, especially in the auto manufacturers, which is great news. But really, we're not in an upward trajectory right now. We've had 3 months in several key indicators that have been negative, and we're really looking for something to kind of turn us positive towards the latter part of the year. But you really look at it. The concern really lies right now with the euro and what was said by Draghi and other people in leadership positions right now over in Europe, because someone needs to go in there and say, hey, we're going to pay the bills or bonds of a country that's non-performing right now, and that's really troublesome. And you got China, which is in a little bit of a slowdown right now. So people are going into the United States, they're buying treasury bonds, which helps mortgage rates. That's one of the big things. And the other thing they're doing is kind of sitting on their heels because they're like, hey, the market's up right now. What should I do next? After all that's occurred since 2008, I think the thing you have to take a pause on is like, where are we now? What did worrying do for you over the last 4 years? And the answer,
it gave me some gray hair.
A lot of gray hair, gave people indigestion, and in the end, it didn't help you much because the market has come back to a certain extent. Now, people get extremely frustrated when you say, hey, hold on and invest and things will return to where they once were. That frustrates all investors. But in the end, it's true. 2001, 1987, which was actually a positive year. And over this past 4-year time frame, we're up 115% from the low of March of 2009. So worrying isn't going to help you. Being allocated, like we talked about before, or being the right investments will help you. And I think, after going through this 4-year period where we've been back to, where we started in 2007, people really have to take pause and say, over the long term, what am I going to do? Especially if I'm retired or I need this income. And the answer is not going to be in bonds. I think bonds are part of everyone's allocation, but you can't sit there and say, I'm going to pick a bond portfolio and be okay. Right now, bonds will be volatile at some point. The Fed can come out tomorrow and say, we're not going to raise rates until 2015. Okay, great. Till 2015, we'll be stable, a low mortgage rate environment, helping a lot of people. But after that, what's going to happen? When I talk to investors, hey, pay attention to where the money is. If you don't want to buy bonds, buy dividend-producing stocks that give you some type of return. Buy international dividend-producing stocks. Those are cheap.
Yeah, what kind of returns are those dividend paying?
Well, some pay as much as 2.5% or 3.5%.
The international ones?
Yeah, the international ones. You look at that and say, well, these stocks are down maybe 7 to 12% over the last year. Some are down even close to 18. Why not buy that and say, hey, I'm going to get paid 2.5% to wait, which is better than the bank, and wait for this, something to turn around in Europe, which could take time. I'm not saying it's a quick story, but one thing I wanted to bring up that I know we talked about before in a previous show is a term that's used frequently. That's tactical investing. A lot of people practice this. I have a system. I have a computer system. I have a model I go through. We can tactically time the market and make things work best for you, the investor. And since 2008, a lot of these products have hit the marketplace. Your advisors might have brought them up. People might have found them on the internet. There's mutual funds that promise it. And in the end, the thing you have to look at is, over a long period of time, these investments can be very expensive to hold because they do charge a lot of fees because there's a lot of trading involved. Some annuity products promise this. Some mutual funds promise this. I think they're getting to the point where ETFs are going to start promising this at some level. We have active management's a little better than everybody else, but no one in the last 50 or 75 years has perfectly timed the market. Nobody. Yeah. It's not something you can do historically over a long period of time.
Well, and it can get, like you said, it can get very expensive with all the fees.
Absolutely.
Yeah,
so I encourage people, you can do that with part of your portfolio, but don't leave all your money with one person who says, I am brilliant and I can do it all. Because whoever bought gold 7 years ago, there's some guy who bought it 2 years ago and said, I'm brilliant for owning gold. Well, no, you should have bought it a long time ago, like 2004 was a good time to buy it, not 2 years ago. It's a big difference. So that's the place where people really have to be careful.
Okay, and you don't charge to look over people's portfolios.
No, not at all. Just
how do people get a hold of you if they wanted to help with this diversification?
Well, the best thing to do is just give me a call. My number is 415-256-8970. I'll probably answer the phone, or my sister will answer the phone, and we'll talk to you about stuff and take a look at everything. I don't charge anyone to take a look. Okay. And just talk about general principles.
Excellent. Okay. Let's cut to our third and final trivia question. Commercial break here. Again, the theme is famous taglines. And here is the question. All right, ready? I got to do this right. 12 terrorists, 1 cop. The odds are against John McClane. That's just the way he likes it. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Now, this movie I like. Their website is lighthouse4fun.com. Check them out. Weather's still good. 888-912-1190. That's our phone number. Give that a call. 888-912-1190 to answer this question. This is a famous tagline from this movie. 12 terrorists, 1 cop. The odds are against John McClane. That's just the way he likes it. Make sure to include your name, email address, and remember, please speak slowly and spell out your information for us, 1 letter at a time, and we will be right back. Excellent.
So we couldn't say the first one or the 5th one, right?
Yes, it'd be the first one.
I like the last one. That was interesting.
How many were there? 3?
5. And they're making a 6th right now.
They're doing 5 right now, aren't
Really?
they? The last ones where they
Oh,
had.
the last one was
grid-
4? Yeah.
I think the last one was 4. They had the grid going, and
Yeah.
Justin Long was in it.
Justin Long.
Yeah.
That tool.
I know the Rocky movies, but I only remember the first.
Rocky's
2
supposed to be over
3.
now, right?
Yeah, probably.
Yeah.
Well,
There was
What's
just Rocky
What's the
38.
movie? There's he's Schwarzenegger. And
Oh, yeah, I
Bruce
wanna see
Willis
that
and
one.
Oh, The
something.
Expendables. I
Yeah.
saw that on
Yeah.
Netflix. Thank
Yeah.
God.
Well,
They
you
cost
got
me-
Expendables
Oh,
2
what, it's
coming
not
out now.
good?
It's okay. I mean, it's
I
worth
just saw
watching.
it coming and I thought it should be called The Expendable.
yeah, exactly. I'm wondering. I mean, they must have some
It's
box
good.
office
Oh,
office thing going on with that because
Yeah.
they can't afford all those actors.
Yeah, really. Yeah, in fact, we were talking about how we could have Rocky 38, Rocky Wears Depends.
Yeah. So I mean, if Stallone's still making money, he's doing something right because not many people can.
Right.
Yeah.
It's tough business.
Yeah.
Oh, I remember there was limited partnerships where you can invest in. Back then, it was like Superman,
Right.
and all that stuff. But they pay the actors so. I mean, there's so much that by the time it gets down to the limited investor, they get nothing.
Right.
And that's if the movie grosses $500 million. I mean, it was ridiculous. But people lose
I
money
see loan
eventually.
pitches all the time on LinkedIn and elsewhere, and some people actually send me emails for for movie financing,
Oh, really?
private
Really?
money loans to
Really?
finance them.
Go, that's
Really?
fine as long as you put up a lot of real estate.
Yeah, right,
Yeah.
exactly.
That's simple.
Finance it.
I know.
You need it.
It's like, wait a minute. Once
By the
get
time you
into
get the distribution
Spielberg-
rights, it's hard to make money.
Mhm.
Just the distribution will cost a ton.
Exactly. So what do we got here? We got
What are we gonna do in the last segment?
Figure out how long
I went to
Well, I
Rotary the
got-
other day. Guess what I heard?
I got just a quick little thing on the Olympics with the gold medals. Like, how they have to pay income tax. for
Right,
that.
right.
How much does it cost?
Yeah,
Well,
25,000 for a goal.
they figure it's 25,000. So the average it'll cost
Like
$9,000.
So even though it's gold plated,
well, it's got to have some
it's-
no, it's probably has some.
It's from
gold
the
medals.
IOC. It's from the American Olympic Committee. So it's funny because they said China they get paid 180. Did you read that today? Because of the internet, like there's someone from China that got paid 180 grand. I mean, you don't understand.
Hey,
I mean for the
medal.
Oh, basically to sell your medal.
No. That's what the country paid them. Our participants get 25,000. In other countries, they get more money.
No. No, the same like okay.
If you
You
win a
win
gold
this
medal,
gold
your
medal,
country
right.
pays you.
Yeah, you get
He's
25,000.
saying there's
No,
income tax on the gold medal.
No, the IRS basically says you want a gold
The
medal.
gold-
That gold medal is
the gold-
worth
the medal
$25,000.
Medal
No.
itself.
The Olympians don't get paid.
I thought they got paid.
No, they're
That's the whole
amateurs.
idea. They're
They're
amateurs.
amateurs.
Yeah.
But the other countries, they
You
treat
Yeah,
them
they
like
can do
kings.
whatever they want in
Yeah.
other countries. Yeah.
They treat them like kings in some countries.
Oh yeah. Yeah, that I can imagine. And
So the guy was crying. He got a silver medal and he's crying. I
Yeah.
apologize. I ruined my country's.
oh yeah. Well, what about the guy in Colombia in soccer? Who
Who
actually kicked the goal in his own goal.
Yeah,
And,
Pablo Escobar got them.
go. Where's this guy? He don't exist no more.
so how long we got on the
Okay, we got 11 minutes and 20 seconds.
11:20.
Talk a little bit about the Olympics here, and what else you guys want to
Gabby
cover?
Douglas.
Oh yeah, she's so cute. She's a little cutie. Yeah, what else do we want to cover?
The fact that NBC's not making any money on that, or
Yeah, typical. Yeah, in
Yeah.
fact, Beijing they tore down. I mean, how much did they spend on that?
In the cities.
well, that's what realistically happened to Greece. They said Greece should have never hosted the Olympics. They
Back
couldn't
in
afford it.
1896.
No. The more recent one, 2004 was it?
Well, that's so the
Yeah.
so the network that televises it doesn't make any money, and the country that hosts it
Well, I
makes
think
money.
NBC they were figuring that they're going to be closer to
They might make $100 million after everything's said and done.
Really? Or
Profit.
London thinks that they might,
Profit?
Profit.
or London might break even.
Let's talk
Yeah.
a little bit about that. That's
Okay.
interesting.
Yeah.
They by pushing everything to prime time and cloistering the information on the internet in certain areas where you can't find it, and it's helped NBC a lot. Everyone's watching.
Interesting.
Yeah.
Okay. Great. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money, Robert Schiff of RPM Mortgage, and Lou Batmale of LPL Financial. When we cut to the third and final commercial break, we asked this trivia question. And again, the theme is famous taglines from the movies. 12 terrorists, 1 cop. The odds are against John McClane. That's just the way he likes it. And what was the name of that movie?
That was too easy.
Die Hard.
Yes.
Exactly. Okay, guys, let's talk a little bit about the Olympics here. Now, I was just reading that winning a gold medal costs Olympians in the United States about $9,000. Costs them because
In taxes,
in
right?
taxes, yeah, that's kind of the average tax rate they're looking at. Because the IRS says, hey, you just won something that's worth $25,000. Now, I don't know if that's the actual value of the gold. That's probably not the gold per se, but they're probably saying like if you were to go sell it, because it's got some other value other than the intrinsic
Market value.
market
Yeah.
value of that. That's pretty nasty. Maybe when you go up there, you go, I don't want it.
Oh, wait a minute.
I'll take
That-
fourth. I'm
that-
putting it
I'll
fourth.
take fourth.
That's what those badminton players were all about.
Well, one of the senators did propose waiving that. They proposed a bill that would waive that tax. 'Cause that's really
Oh, it would
weird.
be,
That's
yeah.
Tax cut.
Tax cut.
Not another tax cut.
Yeah, exactly, for all those rich Olympians. But in fact, what was it? Beijing just tore down their huge stadium they had built for, what year?
Are you kidding me?
Yeah, oh yeah,
4
it's in
years
rubble.
ago.
No, not 4 years ago. It's longer than that. But it's rubble now.
Beijing was 2008, right?
Yeah, it was
Yeah.
4 years ago.
That was
It's 4 years ago.
Wow, I'm
Athens
out
was
of touch.
2004. Yeah.
No, Athens was 1896.
Oh,
No,
nice.
it was 96.
Oh no, 96. Yeah, that's right. Oh, I know that was a.
Where was
Atlanta.
Caesar?
So what is it,
Yeah.
so what is it about these Olympics? They say the countries that host them, most of them lose money, and then NBC, if they break even, they're considered doing well. I mean, what is it? Is it?
Well,
I think it's pride.
perhaps the 1% make money off of it.
Oh, you're just part of the
Country
1%er.
Are you Mitt Romney?
Robert. Yeah, exactly.
Well, Mitt Romney said that he was nervous that Britain couldn't pull it off.
Oh, I remember that.
Yeah, he said that earlier this
But that was
week.
more of a security thing.
Was that a
wasn't it?
security
I
thing
think
or
it
was that
security.
financial?
No, I think it was more of a. I think it was more of a security.
It was a
thing.
security
Well,
thing.
Yeah.
like flow of traffic and getting
Yeah.
people here and there.
Of course, the one thing that's a little unfair is that we're in a worldwide recession, depression, and London just happens to have had it this time.
Correct.
Whereas if you're in really, really good times, then maybe
Well,
they actually
Brazil
make money.
2016. I think we should all be there. Good time. But
Well,
no, and
Pay for my ticket.
back to
I'll
the thing
do
that they come. I mean, I was out of town and saw an advertisement. I hate to be political about Mitt Romney. They said the Olympics were losing money in Salt Lake until he took over. That was why he's such a hero up there because
Is that right?
that's what they said in the political
But that's the
advertisement.
Winter Olympics.
That's the Winter Olympics,
Yeah, but
right.
I'm not sure what the difference is from
Probably a lot more-
financial.
I would imagine more money in the Summer Olympics.
I would
Right,
think
yeah, it's
so.
bigger venues, absolutely.
Yeah, but
Yeah.
you were saying off air here that in other countries they actually get paid. And
Right.
they're treated like kings. But
No. There's a report I saw today that someone they figured he was going to make about $180,000 going back to his country.
But now they're not talking about endorsements and stuff.
No,
because
that's just
little
money.
Gabby that figured she's going to make about $9 million over
Right.
the next 10 years.
Wait, I think what is Phelps 21 million? I think or something like. I mean, I think he made 25 million after the last Olympics was the number they threw out
Okay,
there.
because they're not allowed to get paid
But
being
the
amateurs,
endorsements.
but endorsements are separate, right?
So
so
for the
that's
swim,
true.
yeah.
Phelps has
Right.
a big financial picture over the last 4 years, but he's still in the Olympics, so it must still be a quote amateur.
Correct.
Yeah, because he's not actually getting paid. Well, I guess in our basketball team, even though they're professional, they're not getting paid,
Correct.
by the Olympic situation. They just have to be doing it.
So I guess the countries that host this do it for the prestige, kind
Yeah,
of like
I
the
think
reason
it's
we
pride.
do this radio show, not because we make a lot of money, but for the prestige.
Well, both of it, but you got to remember from an infrastructure. I mean, we talked about in our country building all this infrastructure to make money. And you think about it, how many construction workers were employed in Britain over the last 4 years for this project, and how many man hours and paid man hours there were? I mean, it's substantial. It's several $billion. It's going to Brazil in 2016. I bet you they're going to roll out the red carpet. They have a lot of money down there. Things have been very good in Brazil the last couple of years. That's going to be a huge boon to their economy. I think I know they throw out the numbers in Athens all the time because Greece is having some problems. I think they spend around 15 or 17 billion in Athens. I mean,
But you make a really good point because it's not so much just, gee, here's the Olympics this year, what did they make? But for the years before, because it's at least 7 years ahead of time that they decide where they're going to have the Olympics, and so that gives them years to prepare. And like you said, they have to be building and all that because in Beijing, was it 2008 Beijing? I understand the stadium, this beautiful stadium they built is now nothing.
They call it the Bird's Nest, right?
Birds, yeah, that's
Bird's
right.
Nest, yeah.
And didn't it crumble? I mean, they just tore it down.
They must have spent several $100 million in that place. That's just
Of course, they got a lot of money.
right.
Well, related to a little bit to this topic is I was just reading yesterday's paper on the America's Cup. They're now down to 5 teams. Of course, San Francisco has been touting this America's Cup as being, all these billions of dollars are going to come in, and for a while there, until they decided not to, they were going to do a lot of waterfront renovation and rehab work, et cetera. And I think they were talking about 17 countries coming at one point representing the America's Cup.
So what happened? They just
racers.
don't have the money to come.
That's exactly it. It's France was the latest one to just drop out this past week, and so now they're talking about 5 teams. So that the whole idea that the America's Cup, and it's still going to be great. It's going to be fun.
I got a cheap
interesting.
rowboat that I can put in. It's got a hole in it, but that's okay. I'll just row fast.
But I guess the cost to compete must be unbelievable. I'm
Right.
a little bit surprised by it.
Did you guys you read that article about there's 80 team members that needed housing? They picked Alameda as the place to go, and they said they thought they were going to put them in barracks in Alameda, but they had to find apartments for 80 people. That's a lot of people.
Put them on the aircraft carriers.
Yeah,
Yeah.
on the USS Hornet. But yeah,
Exactly.
you got I mean, you figure there's 400 or 600 people that need housing. That's for a long time. It's 13, 18 months.
How many
But
pages
if
of tank?
you see what they're doing in San Francisco for the last probably 40 years. That the piers in San Francisco have been dilapidated,
Yeah.
Rotting.
and they're not
Or on
being
fire.
used for anything.
And they just have a big
And
fire.
because of this, now they're all being rebuilt. The old ones are torn down, and it's going to change that part of the city.
Yeah, aren't one of the piers going to be for basketball?
Hopefully,
Is that their-
Yeah,
Is
the
that
Warriors
very-
hopefully are going to be able to build their stadium.
And
when they're-
they
How does
came out-
Oakland feel about that?
Well, they're not happy, but they came out today and said it'll be smaller than Oracle if they build it on the water because they only
Of course, if the Warriors don't do well, then they need it to be smaller. They're going to get too many.
They're
I like
a good
Mark
roster.
Jackson.
They got a good roster. They changed their roster around. But no, you're right. I mean, that's the whole point, though. I mean, how do you kickstart the economy? And the answer is some of these things. I mean, America's Cup might not be the boom we thought it was going to be, but it's changing the complexity of the waterfront, which could bring in more traffic from cruise ships. And also, it's all these, external. I know a guy who's an electrician. He goes, "I've been working on the thing for the last 6 months. Being an electrician's wage. That's not a bad gig.
No,
That's a lot of money. So I mean, it's
Kickstarter.
it's trickle down. I mean, I hate the words trickle down.
It's true though. I mean, look what AT&T Park did for that park. And actually, before AT&T Park, look what the earthquake did. It knocked down that stupid waterfront Embarcadero freeway, and as a result, that entire area has opened up. I mean, it's amazing. It's completely over the last 20 years that whole waterfront area down at Embarcadero has just been completely.
And it's a beautiful stadium.
Oh my God.
Well, and I hate to say it, but California and San Francisco specifically is not good. A change type of environment. They don't like changing anything.
Right.
But this proves that change can be good at sometimes.
Sure.
Forward thinking can.
Well, even just putting those palm trees on the Embarcadero. I mean, it's just really
Yeah.
pretty.
In those old trolley cars they brought in. And
Willie Brown did that, didn't he?
Yeah, it was all
I believe so,
Willie
yeah.
Brown, that park never would have been built without it.
Well, it's an amazing, a whole bunch of variables that came in, starting with the earthquake. I mean,
Right.
it's just things that you couldn't.
Yeah,
have
1906, man, that was tough. Oh, 1989. Yes, of course.
Every single time.
So Lou, before we, since we're running out of time here, we can't end the show without what's happening with Facebook. You're the stock guy. What's going on there?
I can't
Down
comment.
almost like
Okay, well, no. We had our first earnings. That's all. I mean, really, what I can say is Facebook has had its earnings, and what they had is they had this roadshow. They had all these, this is what's going to happen once we go public. This is what we're going to earn once we go public, and they're not hitting the numbers. And actually, I think I read this week they lost 2 key employees left. So stay tuned. I'd say we need to learn more. As we talked off air earlier, LinkedIn had a kind of a turnaround, because their earnings are better.
Well, didn't Facebook, some big news came out like with GM and some other big companies are pulling back because they're saying we're not.
That was right at the
traction.
IPO. They did that right at the IPO that happened, which was really,
there's another one.
that created some unstable. It's very unstable from that standpoint, but really what they need to do is they need to act like a public company. They haven't really acted like a public company. So I think maybe they'll learn and they'll figure out this is what we need to do, this is how we're going to generate revenue, or who knows. I mean, again, it's a stay tuned type of story. When we talk about it in December or October of next year, we'll have to see what happens.
Well, guys, this has been a fun show. We didn't have any special guests. Of course, all you guys are special, but it's kind of fun.
Faces built for radio.
That's it. So special. Okay, here are our thoughts for the day. If people from Poland are called Poles, how come people from Holland aren't called Poles? And whose cruel idea was it for the word lisp to have an S in it? That's mean. That's just darn mean. Okay, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.